I hope my voice is audible. Can anyone tell me? Am I audible to anyone? Bharat?
Yes, sir. Yes, sir. You are
Okay,
completely
okay.
audible.
So welcome students and all the participants for today's session. Well, today we have the resource person with us, Mr. Bharat, who is again alumni of Jain College of Engineering. So on behalf of Jain College of Engineering Department of MBA and all the students, I welcome Mr. Bharat
Thank
for
you, sir.
this session.
Thank you, sir.
Well, the overview of this session to all the participants, let me give with some quotes. Students, it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you will do things differently. Well, Wall Street is the only place that people ride to it in a Rolls Royce to get advice from those who take the subway. Predicting rain doesn't count. Building arc does. We enjoy process far more than the proceeds. So with this quotes of Mr. Warren Buffett, we will start this session with a lot of positive attitude and learning, hunger of learning. So today's broad area will be covered by Mr. Bharat. The areas related to fundamental and technical analysis when it comes to equity market. Then he will be covering about the charts, the various charts types, the trend and trend reversal patterns, as well as the moving averages and so forth. So with this brief introduction, let me hand over the presentation to Mr. Bharat. Bharat, over to you. You can start your presentation.
Thank you, sir. Thank you. A wonderful introduction there. Good evening, all of you. My name is Bharat, and as sir told, I am a Jain College student, so I know how exactly the things go on, like the teaching over there. So, in that, I would like to add up. Today, we are going to learn more about stock market. So, why exactly is this session is? I want to tell you something about this session now. Thing is, there are in our Indian population, there are around 130 crore, somewhere approximately 130 crore, and out of which only, as per the out of which only 133 crore people are into trading. Means there are only 3 crore people investors. Some invest in equity market and some in mutual funds. So when comparing our India to US, for example, in US there are 50% of the population people invest are like people are in investing market. So they invest into equities. So why is that? Here only 18%, they're 50%. So why is that big difference? The only reason is lack of knowledge and lack of trust. When I say lack of knowledge, where do you get the knowledge of trading? Is there any book, or is there any website, or nowadays new trend, that is Telegram? Are there any good Telegram groups which you can follow? No. The answer is a big no. You will have to get that own strategies. You'll have to get your own strategies. You'll have to understand the market. So it is basically an art. And you are the artist. You should be able to create an art that is nothing but wealth creator. So creation. So here our entire wealth creator team welcomes you to this session. This session will be held on every week, basically just for 45 minutes. Why 45 minutes? I understand, because the main reason behind giving a 1 week gap is that you experience the things that we teach here. Because I believe that not just knowing things, but also doing them is the one that gives you good experience, right? If you just know things and keep that in your mind, it is like waste of memory. So when you try to implement that, it will give you a sense of that knowledge. It will give you a taste of that knowledge. So today I'll be covering all the topics here I've mentioned here. Like firstly we'll be going with fundamental and technical analysis. Then chart analysis, in which I'll be telling you about candlesticks, line chart, bar chart. Then we'll be analyzing trends, support and resistance, breakout, breakdown, and swing trading. Now, why I have put the swing trading at the last? So this is the main thing that I want to tell you all today, swing trading. And in order to understand that, you will have to understand trend line, support, resistance, breakout, breakdown, and also fundamental and technical analysis. So the fundamental and technical analysis, these are two types of analysis that usually that broadly classified in investing. That in itself is a very vast topic. So it requires a huge lot of time. And I'm sure in coming weeks I'll be covering fundamental in 1 week, technical analysis in 1 week, and so on. So you got to know the structure of a today's session. So coming to swing trading, why exactly swing trading? You might have a question. What is this swing trading? Why am I teaching you that? From my perspective, swing trading is very best, like the best trading strategy for beginners. As per my knowledge, you all are students, right? Like me, you all are learning things. You all are learning new things, and this is completely new for you. Swing trading. Okay, for some people, those who know this type of technique, it is a brush up. Okay, just compare how exactly the things work here. So, talking about the stock market, there are basically two types of people here. One is an investor, and the other one is a trader. So, what exactly an investor looks into the market? Investor basically follows a fundamental analysis, and a trader follows a technical analysis. Why fundamental analysis? Because investor is seeking to invest his money for a long term. I'm saying long term here refers to a year or greater than more than years. It may take a 10 years or 5 years. It depends on what is his returns that he is expecting from the investment. And coming to traders, I said they use technical analysis. So why technical analysis? Because they are also putting their money, they are investing their money to get returns. The motto of both investors and technical traders are same. They both want to get money, but the technical analyst here, he wants to get his returns with a very short period of time by investing his money for a very short period of time. So what are the criteria that they look for? So coming to fundamental analyst or an investor, the investor, whenever I suppose, for example, if I say I am an investor, if I want to invest in a company, there are a huge lot of parameters that I have to consider. From those parameters here, in the right side of the screen, you can see that there are fundamental analysis and economic analysis, industry analysis, company analysis. So these are different analysis, and along with the analysis, there are certain parameters that really affect the company, growth of the company, like GDP, inflation, government policies, economic policies, and RBI policies. So in the left side, I have written few top like the sort of words here, like net profit, profit margin. So these are all the commonly used parameters that are used by a investor. So what is the net profit of a company? My aim, see, as an investor, my main aim is to get as much as profit as I can from the company. Correct? So here, for a company, when I see the net profit of a company, it should be high. So what is the net profit? It is nothing but the total net profit of a company is total income of the company minus total expenses. So total income might consist of revenue, sales, and miscellaneous incomes that a company can get. And in total expenses, we add up operating expenses, taxes, labor charge, depreciation, etc. So the net profit is the profit that a company holds in its hand. Means it is like a cash that it is having. So when it wants to expand, or the company wants to expand their business, they can go for it. Then what is the profit margin? Profit margin is also calculated by net income. It is a ratio of net income divided by revenue. So what exactly this profit margin means? The higher the profit margin, the higher the profit margin, it indicates that it has a better control over its cost. Means if I'm, for example, if I say it has 10%, my company has 10% profit margin, means I am making from every 1 rupee of my revenue, I am making 10 paisa as my earnings. Okay. So why is this necessary? As an investor, if I put my money, I want the company to make profits so that I get more benefit from it. So the higher the profit margin, the higher the control over the cost, the higher the gains. Then coming to the next point, overall economy, GDP. As you all know, in recent 2020 crisis, our GDP has totally come down, right? But we accept it to go up unless and until there are some policies that are being introduced which will support our GDP to go up. Next, industrial conditions. Industry conditions or policies and financial conditions. So here, what financial conditions what I'm talking about is it is the quarterly results that we get from a company. So based on the quarterly results, the investor will analyze. This is not just for one year or year over year, the whatever results we get. It is on based on maximum up to 11 years because industry cycle that we call 11 years of cycle. So every 11 years it is again renewed. We start a new cycle. So that financial cycle that is for 11 years. So the investor will be analyzing the quarterly results or year over year results of a company for 11 years. Then management of the company. This is the main thing that we have to observe. Management, when we speak the word management of the company, we are talking about the top leaders in that company. For any company to grow or for any company to flourish in that sector, the management should be very strong. For example, the best example is Tata, Ratan Tata. So when he was the leader of that Tata company, he had all the control over it. He even tried to give his position to other people, but they couldn't handle it. You know the recent incident that happened in Tata. So now they are into a huge case. The big case is going on. It is not yet resolved, but still, that is what happens when the management of the company is strong. When the management is strong, the company will grow. The company is set to that. There is a discipline maintained in the company which are never crossed. Then return on equity, that is ROE, it is a ratio. Then PE ratio. What is a PE ratio? That is price to earning ratio. It is basically used to evaluate the current share price of the company. So I told you all this n number of parameters that an investor looks for. So only when these parameters, not only these, there are different parameters also. When I'll be covering the fundamental analysis sections, I'll tell you exactly what the parameters are. So in that these parameters, when all these parameters match, then only an investor is satisfied or he is ready to invest his money in a company, because he knows that this company will provide me so and so results within so much duration of time. Means if the price is 10 rupees, he will come to know with the performance of that company. If the stock price is 10 rupees today, based on the previous performance of the company, he can predict what the stock price of the company will be next year. So this is what the parameters that is going to. And talking about traders, the only thing they think about is the chart patterns. Okay. See, the trader tries to understand the patterns in company's share price, not in company's financial performance. Okay. He is only interested in company's patterns in company's share price. And he assumes that the historical patterns in share price would repeat. Means he's searching for patterns in the financial stock price. Okay. And the main aim of this trader or the one who is using technical analysis is for short term. So what are the parameters that he is using to trade? So that are like charts, moving average, indicators, and oscillators. Okay. So you know basically there are different types of charts like line chart, bar chart, and candlestick diagram. Then moving average. What is a moving average? Like it is an average that we take out. Why it is called moving? You'll come to know that. I'll be explaining it in a later part, where we'll take a live example of a company and perform all these tasks. Then indicators and oscillators. These two are the elements that are used by all the traders. So what are these indicators and oscillators? These are certain parameters that are reflected. Like if there are too many buyers or too many sellers, there is a RSI indicator. So what it is, we'll learn in depth. But right now, I'm just telling you the examples of it. RSI indicator or the volume or a Bollinger Band. So these are different bands or levels that we use in order to seek or understand where the pattern is going to take us. Like how in fundamental analysis or how an investor is analyzing his financial statements of the company, here we are analyzing the charts of the company, where we'll predict where exactly to enter into a market and when to exit out of the market. Okay, so I told you there are different types of charts, but broadly there are three types: bar chart, line chart, and candlestick diagram, or a candlestick chart. So one of the widely used or well-known diagram charts are the candlestick diagrams. So why are these used? Because whenever whatever strategy we are going to apply, okay. Now today I'm going to learn swing trading strategy. So when you apply that strategy, the most of the results or the accurate results, which is results you get, that is in candlestick diagram, rather than in bar charts or in line charts. So today you will be studying in depth about candles. What exactly a candle is, how exactly a candle moves, or like how exactly a candle is formed, what is the duration of each candle, etc. So before that, I'd like to tell you or bring it to your notice that there are two types of people in share markets. As I earlier said, investors and traders, right? In that also, in share market, when we are talking about stock in technical analysis, when we come in traders, there are again two types. One is buyer and the other one is a seller. So buyer wants the share price to go up because he'll be buying at a lower level, and when it goes up, he'll be selling it. Then only he'll make profit, right? And the sellers are the one who want the market to go down. Why? Because the sellers will sell their stocks when the market is at a higher level, and when it comes down, they buy it. So here there is a reverse strategy that they use, because they sell it first and then buy it. In share market, this is also possible, and no matter the market falls or no matter the market rises, you will make money. That's it. Okay. So we call these buyers as bulls, bulls, bulls of the market, because they want to take the market up. Why is that comparison with the bulls? Have you all have seen bulls, right? So whenever a bull wants to attack someone with its huge horns, it just throws you up in the air. Correct? So it is throwing you up in the air, means you're going up. It's the same scenario in bears. Why are the sellers are called as bears? Because when a bear wants to attack someone, it will give a tight slap, like a slap downwards towards the ground, means it is taking the person down. So the bull and bear together are there in the stock market. So when the market is rising, that is, the buyers are buying the shares, it goes up. That is why they are called bulls, because bulls take the market up and bears get the market down. That is why when the market is going up, when the share price is increasing, it is called a bullish market. And when the market is going down, that is when the share price is decreasing, it is called a bearish market. I'm putting this in very simple words: bullish and bearish. Bullish is green candle and bearish is a red candle. Okay. So here in a candlestick diagram or a single candle, there are four dimensions we'll have to look in. One is high, low, open, and close. So what are these four dimensions that we have to look? Suppose this green candle. So this is a green candle. We call it as bullish, right? So in this green candle, I have an open area. Okay. One second. I'll give you a very good example. This card. Yeah. If I Suppose this is my axis, and if my stock price is starting at 100 rupees, okay, it is starting at 100 rupees. So I am drawing a graph. It's going down, it is again coming, it is coming, and again it is going up. So it stops at 125. Okay, it started at 100 rupees, and at the end of the day, it stopped at 125. Okay, then my open. So now here in the candle diagram, so this open is the price that I start. Where did I start? At 100 rupees. Okay, that is the value of my open. Then where did I close? At 125. Correct. So now we got open and close. Then what is this high and low? High and low. So here I have started at 100, stopped at 125. But what is the lowest value that I have reached? It is here. Suppose let me consider this is 75. Then my low would be 75. And what would be my high? The highest value that I have reached is that when the market closed, that is 125 itself. So this is the high value. So considering this, what I did here is I took one whole day, correct, from 9:30. So we'll consider the market timings from 9 to 3:30, correct. So from 9 to 3:30, 9 o'clock it started at 100, 3:30 it stopped at 125. So if I am considering 9 to 3:30, then this is a 1 day candle. Okay, so that is the duration of this candle. That is 1 day candle. So if I want to represent this in terms of numbers, I would one second. So what I'll do is I'll show you a live example how exactly these candles are, how the candle patterns. Okay. So I'll open a Motilal Oswal terminal. So here there are different stocks. I'll select any one. Let us go with this Tata Motors. So about this terminals, there is still time. You'll come to know about this. Okay. So these are the candles that are formed. Okay. So this is a single candle, 1 day candle. Why I'm telling 1 day is I can select the durations here. If I want 1 minute candle, I can do it. So this is 1 minute candle. If I want 2 minutes, 3 minutes, and so on up to 1 hour, 1 day, 1 week, 1 month, quarter, half a year, full year. So I'll go for 1 day. So this candle here is a day candle, means here. So the lowest value it has gone is 130, correct? And the highest value is 133. And where exactly it had opened is 132 and closed at 131. So instead of looking here, I can directly see it. In the terminal it is written here in small words. O, it means open. H is high, L is low, and close is C. So it opened at 132, it closed at 131.90. So today it is a down market. If the market, the stock price has reduced by somewhere 10 paisas. Okay, and the highest value it reached today is 133, and the lowest value it went is 130.01. Yeah, 130.00. So this is how you read a candle. So I told you about the green candle now. The same scenario is applied to red candle. Only thing is that in a green candle, it opens first and the close is above the open. But in a red candle, that is a bearish candle, when the market is falling, it opens above and then closes below. So this was about the body of the candle. Now coming to the shadows. So what is this? As I told you here. So here my highest value was 133 and my lowest value was 130. Means my stock price for today has gone as high as 133 and again come back here. At the same time, it has also gone to the price of 130 and again come back to this value 131. So that is what, when a stock price moves up or below and again comes back to its original place, That time it creates a shadow. This shadow implements that there was a movement until up till this point. So here in yesterday's candle, if I check, the lowest value is 133 and the highest value is 143. So there is a 10 to 10 point deviation here. And where exactly it opened? It opened at 139 and it closed at 134. So again, yesterday it was a bearish market. So like this, you are going to like analyze not only a single candles, but you are going to tell you a strategy where you will come to know where it is a bullish market or a bearish market. Now coming to the slides again. So you understood about the candlestick diagram. So now I told you if there are multiple green candles, it has to go above. The market will rise. So when the market is rising, it is called as a uptrend. So that trend that is created, or this is a line chart. I'll explain it here. So here you can see the market is continuously falling down from 7th of this month to 19th of this month. So this is a trend that the market is following. So this is about Tata Motors. This is a stock of Tata Motors stock I am showing you. So here you can observe from 7th of October, Tata Motors stock price has continuously come down till this point. So from 144 to 126. So this is a complete downtrend. How am I coming to know that? Because every time I am coming down, every day it is coming down. So here I'm going to have lower lows. Means every day we are going to decline. It is going to decline, then it is a downtrend. Opposite of that, we have the uptrend. If I have green candles, if I have continuous green candles, then it is a uptrend. What if I have green as well as red candles at the same and I am at the same level? Then it is called as a sideways trend. So in sideways trend, we should never trade, because as a trader, I will always be looking for a uptrend or a downtrend. Where if it is an uptrend, I will buy and then sell. If it is in a downtrend, I will sell and then buy. But in sideways market or a sideways trend, we can never make money. Then coming to the next point. Okay, coming to the next point is support and resistance. What exactly is a support and resistance? In putting it in a simple practical thinking, if I am standing in a room, the floor is my support, and what is my resistance? See, the room has a roof, correct, and down I have the floor. If I want to jump up as much as high I can, my maximum limit will be my roof, because I cannot go beyond that. If I have to go beyond that, I should jump with a large force so that I break the roof. So this is just this is not possible practically, but I'm just giving you an example. So where am I standing right now? That is my floor. That is my support, and my resistance will be my roof. Similarly, comparing this with the market, here I am the market value. Okay, when the market value, okay, suppose this is my market value. It is going up, down, up. Okay. So what I will do is I'll take a line here. See, this is a line that the line which is called as a resistance, and this is a support. So why I have denoted this resistance as support? See, the market is coming up and again coming down, going up, going down. So down until where? Until the resistance. Sorry, until the support. And again from here it is going up to the resistance. So many times it is touching the resistance, but it has not gone beyond that resistance. So in such scenarios, we call this as a strong resistance here. Strong resistance and strong support. If the stock price is not going beyond that resistance, then it is called as a strong resistance. So then we'll come with a scenario where the stock price will cross the resistance. So here you can see if the stock price crosses the resistance, at this point we call it as breakout. Okay. If it does not cross, what if we go with the opposite scenario where it will cross the support? At this point, we call it as a breakdown. The simple words, breakout and breakdown. If the stock price passes my resistance, it is a breakout, means it is going up. If the stock price passes my support, it is a breakdown. So here are the simple examples that I have given. So see, this is a chart that I have taken from this is Ujjivan Bank stock chart diagram. Okay, candlestick diagram. So here I have taken multiple lines. So these are my support and resistance. Then in the next step, I will be teaching you how to take this support and resistance. But now, when I draw the support and resistance, see at this point wherever there are circles, there are breakouts. So this chart I have in this entire image I have marked only breakouts. So here I have one breakout. Here I have other one. See, in all the markings that I have made, you can observe one thing, that the candles are going beyond the resistance. Means they are creating a new candle above. 1, 2, 3, 4, 5, 6. So total 6 breakouts. So this can go on. There are different like at any scenario there may be a breakout in resistance or support. So next we'll be seeing breakdown. So here you can observe the candle is coming down because there is a bearish market. As the stock price comes down, there is a breakdown. So at this point, there is a breakdown. Here also there is a breakdown. Here and here. So what exactly are these support and resistance? We call this as zones. We don't call this as borders. So this is not the border. This is not border. So these are different zones. So in this zone, in the top zone, okay, in this zone, if the market price passes from this zone to this zone, then this will be my support. This line will be my support, and this will be my resistance. And from here, if the market value is going up in the above zone, then the previous resistance will become my support, and now this will be my new resistance, and so on. So as and when my stock price goes from one zone to different zone, my resistance and supports will be interchanged. So that should be very simple. So now we'll go with a live example of putting supports and resistance. How exactly we are going to do that? So we'll take anything. Better we'll take Bajaj Finance. In Bajaj Finance, I'm going to put a 1 hour candle. Okay, so this is a 1 hour candle. Better I take 1 day candle. This will be easy for you all to understand. So what am I doing here? In order to draw the support and resistance, I need not go for any specific time intervals. Like just if I'm trading today, I should not create a support and resistance a day prior or a month prior. There is no such rule. We can create the support and resistance anywhere in the market. Means right from the date when the company is listed, we can create the support and resistance and use it. If you have created a support and resistance 5 years back, that same support and resistance will work now, provided the market value is within that zone. So when I say within that zone, so what I'll do is I'll select one term from here. Okay, so I have randomly selected anything. Okay, so here in this part of my chart, the highest value is this one. So what I'll do is I'll draw a line. I'll draw a line. This is my highest value. I'll draw one more line, which is my lowest value. This is my lowest value. Right. So in this lowest value, what I can observe is my stock price starting from here. Okay, it touched the resistance and again came back to the support. So what I'll do is I'll add one more resistance. See, here you can observe the market was falling, but again it gave me a rise here. Means there is support here. It has taken support here. So what I will do is I'll add one more line here. At this point it has taken support. Again it rised up. And again there is a sideways trend. Again raised. And here at this point it fell down. Means there is a resistance here. Correct? So I'll put one line here. Okay. So when this is my resistance, obviously, if the stock price would have crossed this resistance, then I would call it as a breakout. But it didn't happen. It again came down. It again came down till here. It took a support and again came up. Again down, up, down. But at this point here, and I say at this point you also, my market price suddenly shoot up to the next zone. It crossed my resistance. So when it crossed my resistance, I can see that there is a new candle formed. Here, there's a new candle formed, right? And from this new candle, again, I got fluctuations in the market, but it never went down my resistance level. So what I can observe from this is, so see, now the market has shifted from one zone to the other zone. Now what happens? This was my resistance now. But when the market went to the above zone, now this will be my resistance. And the earlier, what was my resistance, that will be my support. So this is what happens every time. Now, I have drawn only for this part of segment, okay? Now, how can I use the same support and resistance in today's market? Okay, so this is today's. So this is a recent market value that we have got here. So here we came to know by looking at the chart. We come to know that right from 7th month of 2020 till today, the market is in a sideways trend with not much fluctuations. Okay, I am viewing a day chart. Okay, means each candle is one day here. Right from the 7th month to till today, the market is within one single range. And once it gives a breakdown here, breakout here, means if the market price crosses my resistance, then it will go to the above level. So these support and resistance, why are these so much important? Why exactly we need to have this support and resistance? So this support and resistance will allow you to set your target or know your profit, level of profit until which I have to wait for. Okay. Then I told you about support and resistance. Then one second. Okay. Breakouts, breakdown. So these all, whatever I taught you till now, the trend, support, resistance, breakout, breakdown, these things are used in swing trading. So coming to swing trading, why exactly? In the beginning, I told you why it is important for beginners, because here you need not keep on monitoring the stocks every day. Only 5 minutes of monitoring is enough, where you will come to know you either have to keep your money invested or you have to take it out. So the best trading strategies out of which is suitable for beginners is the swing trade. Here you are going to invest for 3 to 15 days of duration. 3 to 15 days, you will come to know within this duration you will have profits or also you will have loss. So there is a control on the loss but no control over the profits. As a trader, you should always have that in mind. When you are going to invest something, you should always, before investing any amount, you should know when to enter into a market and when to exit the market. Entering into a market, you will come to know with your strategies, how exactly you are viewing, your perspective of looking onto the charts. And exiting the market is where you will come to know when you study the risk-reward ratios. So what is the risk-reward ratio? So in risk-reward ratio, You either have to set up that if you go for a profit, if you have a profit, what is the level of profit you are going to get, or you want, and what is the loss that you are ready to bear. Okay, it is a ratio of L is to P, means loss is to profit. If you have 1 rupee as a loss, 2 rupees should be your profit. Here in swing trading. Okay, so that is why I have given minimum risk. This is the point, and high rewards. Indicators used. So I told you there are multiple indicators that we are going to use, but today we are going to use two main indicators, or very simple indicators. That is moving average and trend line. And in moving average and trend line, we are going to apply these indicators on a day chart, means a candlestick diagram with a duration of 1 day. How exactly? We have total 5 steps to follow. You can even take a screenshot of this. This is the strategy that we are going to follow. Just follow the steps. Now select the right stock. Now see, when you are investing, you should invest it in the right stock. But for swing trading, what is the right stock now? In swing trading, I told you we'll be investing only for 3 to 15 days. So in 3 to 15 days, there must be movement in the stock price, right? Then only we are going to make profit, because we will not be investing in a sideways market. We'll be investing in a volatile market. Means either it should be an uptrend or a downtrend. In swing trading, we'll first focus on uptrend market. Okay. So how exactly am I going to predict that if the market will be going up or it will be going in a downward direction? So first, selecting a right stock. In that, one thing you'll have to remember is select a stock with high volatility. Means in a day, it should be either fluctuating by 8 to 15 rupees. The stock price should be 8 to 15. The highs and lows that we talked in candlestick diagram. So that high and low, that volatility, that changes in the stock should be 8 to 15. So then we'll have to apply the indicator. How to apply? I'll give a live example on random shares. Then draw a trend line. Then observe for a breast. So better than just following the this. I'll show you an example. Okay, we'll take on other chart. Suppose per se we'll take Tata Motors. Okay, in Tata Motors. So this is the candle diagram of Tata Motors. So right now they are trading at a price of 131.90. So today's closing value. This is today's closing value. Today it opened at 132. Okay, I have told you already. Yes. So now coming to a daily chart, I select T. So this is already in a daily chart. So following the steps, what I did is I select the right stock. I apply the indicator. So now what type of indicators am I going to use? I'm using moving average and the trend line. So I'll draw these two. How to apply moving average? So not just in not just in our Mozilla Oswald terminal, in all other platforms like Zerodha and all, you have different indicators. They call it here. We call it as an average. In for example, if you stay for upstocks, it is called as a moving average. So there are different indicators that they provide based on your platform. So here, if I select average, I've got a line here. In that, I'm going to change its value parameters. So what exactly do you mean by a moving average? So simple. Whenever I want to take an average of 10 simple numbers or 10 consecutive numbers, what I do is I add them all together and divide them by 10. That is the number of numbers. Okay, then I'll get an average. But what is this moving average? Suppose if I'm adding numbers from 1 to 10 consecutive numbers, and if I want to take out one number at one end and add a new number, then again the same procedure is happening. That is, we are adding them all and again dividing by 10. So the process goes on by adding new numbers into it. So this is the moving average. Means the average keeps on moving. It is calculated for every candle. Okay. So what I do is, in the parameters, I'll do it once again. In the average parameter, moving average parameters, I'm going to take average of 20 stocks or 20 days. Okay, I'll modify it. I've got a line. You can see here. So why is this moving average important? So I told you either the market will be in a downtrend or either it will be in a uptrend. So here you can observe a market is in complete downtrend. It is coming down, coming down, coming down until this level. And again it went to uptrend. Correct. And again see here it is in a downtrend and it has again come down. So there is a pattern that is followed, that is being followed here. See here you can observe at this point, whenever there is a change in trend, it has to cross the moving average that we have drawn. So this, one second, I'll just zoom it there. So this is the point that I want to focus on. So here you can observe earlier it was an uptrend. Then again when it changed to downtrend, it intersected with my moving average. Okay. Next point. Here again the same thing happened. When it from downtrend, when it wanted to change to uptrend, it again intersected with my moving average. So putting it in simple words, if I say that when the market is above, it is in a uptrend, above moving average, it is in uptrend, and when the market is below moving average, it is in downtrend. And whenever there is a change or trend switch, we call it. So whenever there is a switch in the trend, it has to go or it has to intersect moving average. Correct. So what is the main advantage of this? I told you swing trading we are going to focus on uptrend. Okay. So when you want the market to go up, you should be very clear that the market is above moving average. Correct. So if it is above moving average, you are ready to invest your money. It is good to invest your money. So when you invest your money, I told you before entering into a trade, you should also know when to exit from a trade. So once you invest your money, you should keep on monitoring the moving average only. The moving average should not intersect or it should not come near to your stock price. So I'll just remove these. So coming to the points again, what I did is I selected I selected the stock, apply the indicator, and now I'll be drawing the trend line. Okay, how to draw a trend line? Suppose if this is my downtrend. Okay, this is my downtrend here. Wait, I'll take one small example. Yeah, so this is my downtrend here. Okay, so I'll just connect the lower highs when I'm saying, see, I'll just connect this. I have connected the peak point. This is my peak point. I have connected this put, and you can see this is a downtrend clearly because my market price is lesser than my moving average. So here at this point they intersect with each other. So keeping my focus on this point. Yeah. So this is the point where they intersect with each other. So here I will understand when to enter into a market. So the best time to enter into a market is when the market price and moving average intersect, but you will get a fresh candle above the trend line. So in simple, if whenever I draw a trend line where my trend line and my moving average intersect, at that point from that point I should be waiting for a fresh green candle to appear. So here you can see there are two green candles, but I will not enter into market at this point because both the green candles are touching my moving average. No, this is not the right time. I should wait for a fresh independent green candle at this point. Correct? So here I will enter into a market. So once I enter into a market, here you can observe I told you that this is for minimum for 3 to 15 days. So if I enter into the market here, I'll be waiting for 3 to 15 days. See, this is the first example that we took, but here we'll be going in loss because here, if I enter into a market, for example, let me take, I enter here at 132 rupees, but my market value reduced. It did not go up, it reduced. Correct. So it reduced to 130, 120. So should I be waiting for my market value to come up again? No. As I told you, we should follow certain discipline rules that will exit. Means whenever we are entering into a market, we'll have to plan the exit also. That is our stop loss. So when they buy the share at 133 rupees, I'm going to put a stop loss at 130 rupees, maybe 3 rupees down. So 130, when I put a stop loss, if the market price does not increase as per my prediction, if it comes down, my terminal or the software that we are using, it will automatically sell the stocks that I have. That is where the stop loss comes into effect. So it will directly sell it. Means it will help me to protect my capital. Otherwise, what if I have not come out at 130? The stock price would have gone up to 120. Means I will be in a loss with a huge amount. So what you have to do is always have to put a stop loss. So stop loss is your protector, guard here. So this was the first trade I wanted to give you about profits, but it's fine. We have come up with a loss here. So you understand how exactly to exit from the market. Now in the best scenarios, one more scenario I will show you where exactly, see. Here, at this point, this is my moving average. These are my candlestick diagrams. I will draw a trend line again. Sorry. Yeah. So I will draw a trend line. So here you can observe there is a downtrend. Yes. When I drew a trend line, I told you the point at which my trend line and my moving average intersect. From there, I should have a fresh green candle. Correct. So this is giving me a fresh green candle, right? So when this is giving me a fresh green candle, I will invest my money at this stage anywhere. So let me consider that I have put at once again. Let me consider that I have invested my money somewhere at 145 rupees. So when I put this money, I know that the stock will go up because that my moving average is below my stock price. Means it is in an uptrend. So until when it will go to the top price, that is when my support and resistance comes into effect. So we'll draw that later. First, we'll understand how the strategies work. So when I get a fresh green candle, I'll be putting my money into it. So consider that I have put at 145. So until when? You can see here, at this point, even if I'm satisfied with 10 points, if I'm entering into market for 145 and exiting from it at say 150 or 160, you are in a good profit here. Means for each share you are making around 15 to 20 rupees. So that is where the swing trading analysis comes into works out like this. This is how it works. Means you are going to put the indicator, you are going to create a trend line and then wait for a fresh candle to be formed. Once the fresh candle is formed, it is a clear indication that you are going to invest your money. Now see, when I invest my money, I need not keep on checking it every day. I told you. Every morning when I open, when I see the market, I will just check that moving average and the market values are far apart. Because when moving average and market values are nearby, that is where my trend will switch. So I want to invest only in uptrend. So I should just be checking that the trend switch does not happen. So that happens only when the moving average is nearby. So just keep on observing the moving average, keep on observing that it is far. When once it comes near, at this point, if you see, if it is at this point, my moving average has again come near to my market price. So this is very risky trade now. I should either take it out or wait. If you are so confident that it is going to rise again, wait. Otherwise, it is better you take your money out. Else, one more good thing you can do here is when you put your money here, you will have stop loss somewhere 3 points down. So if you are investing at 145, you put a stop loss at 142. You know that your amount has raised to here. So what you can do here is you can put a stop loss at 5 rupees down. That is also that is called as a trailing stop loss. Trailing stop loss. You can put a stop loss here and again wait. So when your price reduces below your stop loss, it will trigger. It will sell it off. When it sells, you are still in profit because you had invested in 145 rupees and now you are getting somewhere near 160 or 165. So that is your level of profit that we are gaining here. So this is for one stock that I'm talking. Okay. In equity market, one stock for one stock you are making if you are making around 10 rupees, for 100 stocks you'll be making 1000 rupees. The more stocks you have, the more multiples of profits. Okay, so this is how the strategy works. What I did, I just followed the simple points that I have told you. Select the right stock, apply indicators, draw trend line, observe for fresh breakout. This point is very important, and set your stop loss and target. So here I have taken a very easy example. See what I did. So here, as I said, I have taken a moving average. Correct. This moving average, and the blue color line is my trend line that I have drawn. And the point, exactly at the point where my moving average and trend line meet, at this point, I have a fresh green candle. Initially, it is a red candle, but still, it is above my trend line and above my moving average. So that is a sign that the trend switch has already happened. Then it will follow this trend. It needs, see here it has followed from. So if I had bought it here somewhere around, so I have written here buy at 114. If I had bought it here, I could have sold it at 145. 145. So that is the limit, or that is the resistance that I am coming to. So here, if I am having this much profit on each share, if I have hundreds or 200 shares, so I will be multiplying it with 100. My profit will be multiplied by 100 shares. So this simple strategy you can apply. You can apply on any share, and you can also apply on Bank Nifty. Bank Nifty, I'm telling you, it is the most volatile market in India. Not only in India, in world. Our Indian Bank Nifty is very volatile. Okay, so in Bank Nifty, if you apply this rule, you will have very huge profits. But the main point is, when you have huge profits, you also have to bear huge risk. Since the volatility is not that it is only going to go in a positive trend. It may also change the trend. So with this, we have come to end of the session. But the main things I want to tell you, I have taught you how the swing trading exactly works, how to apply the indicators, how to draw the trend line. All I want you to do is follow these steps and do not invest in the initial stages. Just apply the strategy and analyze if it is working. And let me make it clear: there are 70 to 80% chances that these strategies will work. There is no strategy in any stock market, or no strategy yet developed or invented which will work 100%. These all are probability strategies. So these will have certain percentage where they work. Like for this swing trading, I am saying 70%, 70 to 80%. But I personally use swing trading very often. Whenever I want to invest and I don't want to keep on looking into the market, I go swing trade. I just put money Let it, daily morning, I'll be just observing the moving average and keep it. Moving average, keep it. If it is, if my market value is going in a positive trend, I'll go on adding new stop losses so that my profit is protected. So from this, we come to the end of the session. So right now, I understand that many of you here are beginners. I know. So I want you to go with the paper trade. What exactly is a paper trade? So when I say, so here when I said buy at 114 and sell at 145, you just write it down in paper. Assume that you have bought it here. See, apply the strategy and assume that you have bought it here. So when you assume, just write it down in the paper that you have bought it at 114 rupees, and then daily keep on observing. Observe for 1 day, 2 days, 3 days, and then assume that you have sold it here. So that is the selling, that is the value that you have sold. Then you will come to know what will be the profit on each share. So this is called a back test. Back test is where you are going to analyze it on previous data, and not just previous data. You can analyze it on live markets also. So this was an example of swing trading. So the topics that will be covered in next session, that is in the next week, are relative strength index, that is RSI factor, Bollinger Band, intraday trading strategy. So today I told you about, this was not an intraday, this was a positional or a swing trading strategy where 3 to 15 days. In intraday, we'll be teaching you strategies on a single trade where you will be buying and selling in the same day itself. So so right now, at the end of the session, I want you all to do one thing: is apply the strategy and see how exactly it works. If you all have any doubts, you all have my contact number at the bottom of the message that we sent yesterday. So there you have my contact number, Mahavir Kuruchi, as well as my number is ending with 32061. So you can directly contact onto that number if you have any doubts related to strategy, or you can contact Mahavir Kuruchi also. He's our business associate. We both look into, we both are into a franchise here. So, and coming to the terminal in which we viewed all the stocks right now. So this terminal is a Motilal Oswal terminal. So we as Motilal Oswal franchise, we provide you free demat accounts. This is specially for students. So you can come, you can get to know, you can get in contact with us. We'll tell you what the documents are required. So here, when you get a free demat account, what exactly you can do is all the strategies that we teach, you can implement. You can ask us how exactly the things work, and not just about the strategies that we are teaching. If you have any other strategy also, you can implement. You can start trading. We are here to provide you service at any time. We are here at welcome. Okay. So Rohit sir.
Yes, thank you so much, Bharat, for a detailed presentation.
Thank you.
So, students, you can be in touch with them. They are alumni of Jain College of Engineering, and a very detailed presentation what he has given. So once again, I thank all the participants for your patience listening. I thank Bharat and the MOSL team for giving such a detailed presentation on technical analysis. Thank you so much for all the participants. We'll end the session now.
Welcome, sir. Welcome, sir. And thank you very much for helping us put this session together, everything together. We also thank special thanks to Dr. Rohit Raj and Jain College of Engineering MBA department. Thank you for letting us organize this session. And if any queries, I request all the students, be free, be frank. Even I'm a learner, even you are a learner. Come, we'll learn together.